Good turnaround Tuesday, everybody. How you doing, Sinatra, Steven, Bran, Ingmar? All you guys doing all right? Okay.
Morning, Dale.
Brian, how are you, buddy?
All good, mate. Is it turnaround Tuesday or tanking Tuesday if you're in the playing the Euro?
It's turnaround tanking Tuesday.
Turn the tanker Tuesday.
Yeah. Yesterday I talked about this line in silver. And I said, I don't know if it's going to mean anything. It means something. Look at that, right to, what?
If I had a bell, I'd ring it, Dale.
Yeah, I think, yeah. So, maybe that's it. That, this was the first wave and 78.6 back. I think the whole bull case rests now on yesterday's low. If we take it out, we should see some new lows. And, gold is stronger. It's up again today. It held 61.8, so not as deep. And I'm looking at the end, and even though it traded over 78.6, it's having a hard time closing there.
Yeah.
Taking a shot there on shorts. And then Canada exceeded 61.8, not by much, but on multiple time frames, it did diverge. So WTI's up, maybe the lows in and WTI, that could, help the case for a lower USD CAD. And then if you get any, go ahead,
it's
buddy.
not coming too far off, is it? Dollar CAD, even with the move higher in oil. And
that's a strong dollar, I think. So,
Yeah. If you look at a daily on the dollar CAD, you'll see we've got that 3080 area that we touched 4 or 5 times just before we had the spike through.
Up here.
Yeah, there. And, yeah,
okay.
And going back, 3080 was a real strong level. I expect we'll see something there again.
Okay. We got pretty close, and we was high 63. Okay.
Yeah, close enough.
I'm thinking, that we could get maybe pulled back to the convergence of these moving averages here. It's around 29.20, something like that. Yeah.
I think we might need all to help it out.
Yeah. Nothing earth shaking. Aussie's still holding up pretty good. I still think that you have to look for a spot to get long there. Euro,
another bell ring. Bang on
11,
the 90.
Yeah, 11 on the DSI. And I did read something about positioning here over the weekend. And we have a lot of, I think it was commitment of traders, but we have the largest net short position in Euro since February of 2020. So, I have to go out here a little bit. So here's 2020 and this was Feb. So we made another new low in March, a month after. So if we had the same parallel, we would make a new low into September. But this was a rally that ensued from that kind of positioning.
Yeah. So
be careful being too bearish down here. I know, there's not one fundamental reason except maybe K-Man could comment on the interest rate structure as the U.S. with the pop in 10-year yields catching up to what's been happening in the Eurozone rate-wise, K-Man.
I'm not sure if he's on.
Oh, that's right. Yeah, I forgot.
With his son, so F.A.C.E just stuck with me.
Yeah. Okay. What do you think, bro?
Well, it's making it. We looked at it before. The US yields were all sitting in 3%, and 10 was the only lagger. It just wasn't busting up, was it?
No.
Now we've made that move up into 3%. Is going to be driving things. But as far as the euro is concerned, how long have people been trying to catch the knife in that one? And it's still going, but it's got a bottom at some point. Nothing goes down forever, but we need a strong amount of price action down at a bottom before we even think about a bounce. You know, technically, it's doing the job. You know, we had the bounce to 103.40.60, which was a big level we'd all been speaking about. That held, and here we go, seeing new lows. So the break of parity is potentially really big because it's taken out the prior low at 52, and that is actually the resistance, the main resistance now here. So the battle is going to be, can it go back up and test parity, or is it going to break 99 and carry on further? If we get a test of parity and it holds and we can't break above it, then I think we're heading to 95s, maybe even low 90s.
My bet is from here, and I know people are focused that, you know, I thought that the bottom was in. I wanted to, you know, see what it did at 78.6, but just remind everyone I was long the dollar through here. And the last couple days, you know, I decided no, you know, it's not going to happen. But there is one difference. Let me ask our crowd. They're pretty educated. What's the difference between the low that we're making now in the euro and the low that we made back here in July? You guys know? I'm looking at chat now. There you go, Michael. There you go, Simon. There you go. Look at these geniuses. All right, so this could be a second drive right here, right? I mean, it still has to do something right, but this is a difference. On any other time frames, you know, that's why it needs work. I mean, it's, you know, it needs a rally and maybe even make a new low, but all the other TFs are, you know, unless you go to weekly, that's okay. You know, we're way under 30, so the Mo is just too much for me to want to fade it. I mean, I have to drill down to a 15-minute, and even the 15-minute, you know, confirmed at the low there. So the bigger picture is saying, you know, be alert for it, but there's nothing in the 4 hour, or at least I could rationalize a short in Canada because, you know, the 2 hour didn't confirm, the daily, you know, well, we didn't make new highs. The 4 hour, actually this high here didn't confirm, and even the yen, which is so strong, there's some, you know, almost have a 4 hour divergence here if we make new highs, and you have it here on the 2. So it's easier. It's easier to rationalize fading, than the euro. So
and that's what it comes down to sometimes, doesn't it? Just you add up all the pros and cons, if you like, and you make the decision on it.
Yeah, you're trying. And so for me, what tips me off to relative weakness and strength is RSI. I mean, you could usually tell just by looking at a chart what's stronger or weaker, but that confirms it for me. So little bounce and risk before Putin bombs Ukraine to smithereens on their Independence Day celebration tomorrow, that they're going to be celebrating in their basements and bomb shelters. So what do you think? I think we might be halfway through this. I thought we could go to 40.50. Didn't think it would happen this fast, but Vic Sperando said he was going to be short up until Jackson Hole, so maybe Powell's going to surprise people.
Yeah, and we're still waiting on the blooming schedule for the rest of it, because we don't know who exactly speaking. We know Bailey's speaking, Schnabel's speaking, obviously Powell, but we don't know who else is speaking. So, you know, if we get Lagarde's not meant to be there, supposedly, you know, that's a big name missing from the list.
Yeah, where is she?
Probably on her sunbed.
Tanning herself up, yeah. Morning, guys.
Hey,
on with a paintbrush.
Yeah. So Bitcoin still looks pretty ugly, huh? I'm hearing 14,000 targets in Bitcoin.
Well, if we break
what
the previous lows, which were what, 19 something, I think the next target really is realistically is about 12, but it will depend on the general risk environment. You know, Bitcoin is a high beta proxy for risk, and if stocks start rallying, it's going to be rallying, unless obviously there's some kind of crypto specific bombshell somewhere.
Yeah, that didn't work for people on the, this last rally in the S&Ps.
Yeah.
It really didn't have that correlation broke down. I was kind of thinking, let Bitcoin make a new low. And since Ethereum's been the outperformer, if Bitcoin makes a new low and Ethereum doesn't, maybe go for some Ethereum. Ethereum. It's the age of Ethereum. So what do you think about this level, Stel, that we had in silver yesterday at that right there?
78, yeah, you called it.
You think it's going to hold, or?
I don't know. It's so up to Powell now. I mean, if he's hawkish again, that's going to go.
Okay, so I have a question for you. I know the week before you were looking to add at 1940. We didn't get there. I think it was, here, before it went to new highs. So if you liked it at 1940 here, has your view changed?
It's like AMC, the stock, right? If you liked it at 70, you're gonna love it at 12. No,
it's harder to buy down here.
It is harder to buy, yeah, because it's not. I'm not looking at it just in terms of that, that price. I'm looking at everything else concurrently, and yields 10-year US is back above 3%. Equities are lower, so as long as that's happening, and as long as well, before, I'm not going to do anything, I don't think, before Powell. I really am not. I had said before, Fed fund futures are pricing exactly in between 50 and 75 for the next meeting. If we go close to 75, which I don't think we will, but if we do, then I'm going to probably get get short dollar in some fashion. And my favorite one is always silver, to be long silver. But, I'm not going to do anything before that at the moment.
Okay, it makes sense. I kind of think that anything you want to do before Powell, you're probably going to have a chance to do it if he talks hawkish. Maybe not from the same levels, but so I could understand that. Plus it's August, last full week in the month. It seems pretty dead to me today.
Yeah,
kind of a dead board.
It's a bit slow. We had the move down to 99 in euro dollar, first thing this morning, and then it's just gone asleep since then. So yeah, we're just waiting for these events. See what you guys in the US want to do when you open your trading desk for your cornflakes.
We have data today.
Cornflakes.
Did you say cornflakes? I mean, come on, man. That's like that's
he
that's
meant
like,
frosties.
That's racist.
That's what he meant. Frosties.
That's racist.
Frosted flakes.
Everything's racist.
Tony's a tiger.
Like, cornflakes. I don't eat cornflakes. I eat Rice Krispies. I eat Rice Krispies.
I love Rice Krispies.
Good morning, gents.
Hey.
Hey, Dale, are you eating cornflakes this morning?
No, I haven't had breakfast yet.
Oh, okay. Well, Ryan's obviously, implying that that's all we eat around here. So.
Well, it used to be the most popular when I was growing up.
But I miss those cereal boxes with, they'd put people on them and everything else.
Oh yeah.
Now we get
yeah. If you eat the cereal, you'll turn out to be Mickey Mantle.
So hey Dale, I want to show you something. First of all, if you go over to let me take you over to when you're in ForexAnalytix, you can get to our chat rooms right through here. Joe who's Ripsters in our chat room, he just posted this S&P futures net positioning, only 3 times more net short in the past 25 years. September 2007. October 2011 and June 2020. This is Tom Herden was who's a fund manager. We follow each other on Twitter, but yeah, he was showing this is the last time. This is only 3 times more net short in the past 25 years. That's how aggressive. That's how aggressive this market is getting on the short side of the S&P, and that's something we talked about on the week ahead video. On the week ahead video, I'm like, hey, everybody's leaning into the market right now, so you have to be a little careful, right? That doesn't mean that the market's going to go up, but the risks of a short squeeze are going to be pretty high. And if you take a look at the daily chart, this is the low, this 41.15 level. But look at how pivotal this level has been. Literally, let me get rid of this. Literally, how pivotal this level has been since this whole entire year. So, I mean, if you're short right now, you've got to be thinking, well, I got to be like extra careful around here. You can see these are just big areas that we pivot around, all the time. And then one last thing I want to point out regarding the S&P here. Let me get my mouse back. You take this low, to that high. That's also a 38% retracement right here at 4,100. So really key levels of support, as we're at a 38% retracement, big pivot around that 41.15, 41.10 level. I just don't know if I'd want to be short here, especially heading into this Friday. And then on top of that, a lot of people are very, very much in the camp that the Fed is just going to keep, and this is why the market's so nervous. Everybody feels that the Fed is just going to continue to have this very hawkish rhetoric, because, it's like, this is their opportunity. They're going to continue to raise rates. But how about if the Fed chairman, really references that inflation, might indeed be showing signs of a top. I was actually listening to an interview yesterday with oh gosh, I can't remember his name. Super popular economist. I'll think of his name. I'm sure.
Mohammed El-Arian.
No, not
Krugman.
No,
he's not popular.
Hold on, I'll figure it out. Just give me a second, and I have to go back and look at some history of some videos that I was watching. No, that's not it. From yesterday.
We don't want to know your history of video viewings.
All right. Whatever. It was an interview with, where is his name?
Keems.
No. With Rosie, David Rosenberg. So David Rosenberg, he was talking about how he thinks the Fed is actually the Fed's going to stop hiking rates way sooner than the market expects. And he was talking about all the different reasons why. And I found that really fascinating. And let's whether he's right or wrong, it's not relevant, but he is somebody who is very, very well versed in economics, and he's somebody that I do listen to, and I think the market does too. It's just he just brought up a lot of really great points that the Fed may not pivot here, but we might be in September, near a high in this rate hike cycle. And if that's the case, I mean, we could have the stock market really trading back at the 200-day moving average and maybe even higher going into the end of the year. I'm not saying that that's what's going to happen.
I think it will, Blake.
Yeah, well, you got to keep an open mind.
It's too pat to have a major failure and new lows at that 200-day. And you know what? There still are a lot of bears, right? You just showed that net short. I think you have to clean them out, and you start trading 4,500. You're going to see a lot of people, because they pay so much attention to the 200 days, saying that the coast is clear.
Well, so
then maybe
Dale, you bring that up, and if you watch the week ahead video, I talked about this exact situation, that there's 127% extension at 43.70. If you take the all-time high to this year's lows, the 618 comes in right at the same spot at 43.70. And what I didn't think we'd pull back as quite as far as and aggressively as we have, you know, first thing to start the week. I didn't think we'd be trading down here. I thought it would be a little bit less severe of a pullback, but I explicitly explained that there is unfinished business above the 200-day moving average. And so, you know, if you were listening to the week ahead video, I'm like, hey, you know, how about if the Fed, you know, does actually not pivot, but actually is just not as hawkish as everybody thinks. And if the market is just, if the Fed chair is just not as hawkish as everybody thinks, that's going to be a reason for the market to squeeze. And now knowing, you know, that the market is extremely short, we are at risk of a squeeze higher. And that we have to be thinking about going into this week. That doesn't mean into Friday. That doesn't mean that's what's going to happen, but you got to be respectful of these levels that we're at. And you've got to, you know, you've got to be respectful of the positioning in the market. I don't think there's anything much more important in the markets for me than positioning. You know, I mean, yes, you know, obviously, you know, macro data and what's happening behind, you know, the fundamental drivers of the market and interest rates, that all is very important, but positioning is very important, especially, you know, intermediate term in the markets. What do you guys think about that?
Short to intermediate term.
Right,
because
right.
Positioning over a long period of time is more or less neutral. I mean, if you average, right? Positioning, of course, if we're talking about the stock market specifically, then the bias tends to be long, right? The vast majority of investors are, you know, long investors. It's not like you have 1-for-1 people that are shorting, you know, as a.
There's constant inflow in the equity markets.
Of course,
always.
Of course.
There always
of
is.
Course.
My,
of course.
You know, I always give the example of my nephew who's an engineer who makes probably, I don't know, 150,000 a year. He plows like a third of his net worth or of the money he makes every single month into the S&P or into his 401k, and that's constant inflows. Those are always going to be driving the markets. That's why the markets always have a constant grind higher. And it's not because of him. It's just that's what happens with Americans. Americans just, you know, constantly invest and have money going in the markets. So it's always going to have a long bias. But when you have futures traders positioning short more aggressively than they ever have in the last 25 years, only 3 other times, that is a warning for people who are on the short side of the market. And like I said, everybody has been leaning into this. This 200-day moving average was, I mean, we weren't doing rocket science. I wasn't doing rocket science, you know, a month ago showing, hey, that we could, or actually 6 weeks ago, talking about how we could hit the 200-day moving average. It wasn't anything like that. It wasn't some sort of witchcraft. It was just, hey, that it seems viable that we were way oversold and we're going to get a squeeze in the market back to the 200-day moving average. Then once it happened, you know, everybody's chomping at the bit to sell into this bear market because it is a bear market. And so you got everybody and their mothers, brothers, uncles, sisters, nephews, monkey shorting the stock market at the 200-day moving average last week. So, you know, and by the way, just so you guys know, we actually closed our pattern in play from the short at the 200-day moving average from last week. Just, you know, for those of you that are not ForexAnalytix subscribers, that was done. And by the way, these are patterns in play that have been in, we've have all of our outcomes for the last 6 years. How long have we been doing this, Steve? Still 6 years? Dale?
You mean the webinars?
No, the
patterns in play.
Yeah, 6 years.
Yeah, 6 years. So we've have, I don't know how many patterns and plays we have over the last 6 years.
Speaking of which, I think we had our birthday like a month ago or something.
Oh, wow. All right. Well, anyway, so we're already closed out of those shorts as a result of kind of the evidence, but that doesn't make, that doesn't make this low going to stick. It's just, like I said, you have to be really careful at these levels if you guys are short risk. So anyway, we have about 5 minutes before Dale has his interview. We're missing K-Man today. He is actually doing a Zoom call with his daughter who is in Japan right now. So that's pretty cool.
His son.
What's that?
His son.
Oh, his son. I thought he said daughter.
You never know nowadays. People change sexes all the time.
His family.
Yeah, all the time, Steve. It's
Yeah.
like it's as common as putting on deodorant in the morning. And good morning, Steve, by the way.
Good morning.
Stelios, I know you're looking for a big pivot in silver. Silver actually hit the 78% retracement. Dale, you were referencing a trend line that you were looking at. And gold actually hit the 618 retracement yesterday and held at the 1730 level. And if you guys didn't notice that the dollar index actually hit and brushed the all-time highs, 20-year highs. So I got to ask you guys this: Do you think this is going to hold? I mean, I was looking at this Dutch. Let's see, Dutch.
And the energy price.
Yeah, this is crazy.
Parabolic.
It is. It's nuts. I was going to make that into a
Oh,
line.
I was looking at. I was reading German electricity price is 10 times the average of the past 20 years or something like that. That's not sustainable, and that's something that's pricing. That's bringing the euro big pressure lower, because big recession is coming. If this is the case,
you reminded me to throw a phone call to my uncles in Germany. I remember that both of them were voluntarily paying higher energy prices, so their energy could come from renewable sources. I'm wondering what they think about it now.
Yeah.
So
yeah.
what do you guys? I mean, you guys live in Europe. How bad is it going to be for the rest of the Eurozone here?
Oh, it's fine. We're in the middle of summer. Like, it can't get worse from here, surely.
I mean, and I know you were referencing Ryan. I'm sorry. In our chat room here, let me get back over to our chat room. Benedict, he was bringing up this stat here. This is a crazy. European power prices have soared so much that they're now equal to more than $1,000 per barrel of oil. Now, Mark Chandler this morning was saying that it's $500, but I don't care if it's a $500 or if it's $1,000. That's just crazy expensive, right? So,
yeah.
I'm feeling for you guys going into this winter.
Personally, Blake, I'll have people working in the house in a few days to install energy efficient fireplace. I don't know what's the term, so it can actually heat the house, through wood. Actually,
I mean, are you guys going to be? Or how much is this going to affect Greece?
No, it's going to affect us, all right. Yeah.
Same way as it will affect the rest of the Europe.
Oh, okay.
The European countries.
Okay. All right. That's that's gonna be not.
Does Greece even get cold?
Yeah, like
I'm buying extra sleeping bags.
I was gonna say better get some layers.
Depends what you're talking about. If we're talking about Athens that have the population lives, no, for northern country standards it doesn't. I mean, we rarely get any snow, and we have like something like 10-15 days per year that the temperature is below 7-8 degrees Celsius. Right?
All right. Well, let's not talk about the weather. We got one more minute. What's your best idea today, Stelios? What are you thinking today? I know. Don't tell me I'm going to wuss out because of.
Mate, I'm going to say what I said yesterday. Sorry. Move on to the next person.
No.
I don't have any. Having no view is a view.
God, no
Yeah.
view. Ryan, you're better than that. What are you gonna do today?
No, it's not.
Come on, Ryan. Come on, Ryan. What are you gonna do today? What are you gonna do?
I'm watching this euro dollar. I'm short from 00 above. I want to see a break of 99. I might actually sell a break of 99 if we get one.
Pretty oversold intraday. Dale, what are you gonna do today?
Follow Stell.
You're gonna sit on your hands?
Love you, coach.
Man,
Yeah.
Steve, what are you gonna do today?
Absolutely
Take a
nothing.
vacation.
But if you want, in my opinion, a good risk reward idea, if the dollar heads in that direction, I think USD yen short from current levels is a very good risk reward trade.
Concur.
Dollar yen?
Yes.
Yep, I'm with you. That's a Gartley pattern.
I'm not looking at a Gartley pattern. I'm actually looking this corrective move higher as a channel.
Okay.
If you go back to, we're at channels resistance, actually.
Sounds good. You'll have to jump into the ForexAnalytix chat room to find out more about that. And I'm going to tell you guys right now, the Mexican peso actually is outperforming. So if stocks actually do squeeze higher, watch the Mexican peso back down towards this 1980 support. The peso is outperforming right now, and it has been in this whole sell-off. So emerging market currencies, be warned, because if stocks do rally, the emerging market currencies are going to catch a bid. All right, guys. Well, I want to say thanks, everybody. You know, if you want to learn how to trade our money and not your own money, and not take any of the risk and make 75% of the returns, check out the Trader Funding Program. This is offered to you guys from ForexAnalytix, and this is the sponsor of today's show. There's a 2-minute video at the very bottom of the Trader Funding Program. You can learn more about this program. Like I said, it's a 2-minute video. It's and if you live in North America, you live in the United States, it's pretty cool because you can trade cryptos both directions and a lot of CFDs that you wouldn't normally have access to being in the United States. So check it out. And Dale, I know you have an interview, so
Yeah.
have a great interview. Thanks, team, for being here.
Russ Chow, welcome to
Hey,
F.A.C.E.
guys. Can you
Nice
guys
to
hear
meet
me?
you. Nice to meet you, buddy.
Hey, nice to meet you. Thanks for having me on. I want to just keep hearing you guys talk. This is great analysis. Thanks so much.
Oh, well, thank you very much. You know, a lot of years between the people here at ForexAnalytix. You look like a pretty young guy. I'll trade with you.
that picture's from 40 years ago.
Oh yeah, okay. So Russ, were you going to be sharing your screen to show anything today, or we just going to be talking?
I wasn't planning on it. Do I need to? Would you like for me to?
Well, if you want to, you know, picture speaks 1,000 words. I don't know what's on your radar. And any markets that you want to talk about, that would be okay. Or I could just flip around my charts, and but it'd be nice to see your setup.
Yeah, sure.
You've been in Zoom before. It's the share screens at the bottom.
Yeah, let's see. Share.
So, you know, what I'm interested in, yeah, we could see it there, Russ. What I'm interested in is a little bit about your journey and, you know, what you were doing before you got involved in trading and the business, what led you to it, and tell us a little bit about that.
Yeah, for sure. Well, I actually started trading stocks when I was at about 14 years old. My dad got me into it. And that's where I got my start. I started a drip buying in Aflac, and that actually paid for my college. So I realized the power of stocks, and you know, I didn't know anything about technical analysis at the time.
Right.
But I knew, you know, that if you buy something and hold something long enough and it's a good company, eventually it'll go up. At 14. And then I tried to become a stockbroker. I realized I hated selling. So Instead, I ended up going into writing. I went into advertising for 20 years and wrote television commercials. But on the side, I was trading. You know, to
it's
make
like Hotel California, isn't
it? Pretty much. So yeah, I was moonlighting as a trader, and eventually started making more money than in advertising with much less stress, much less meetings.
Commercial that we might recognize that you created or helped create?
Well, I guess the most widely seen commercial was for Audi. It was a Super Bowl commercial about maybe 8 years ago, where it was a ex-astronaut who was reawakened by the power of the Audi.
Wow. I gotta have one.
It was to the David Bowie song.
I want to be an astronaut on Earth too. Anyway, so all right, so that's a great story. I mean, intro from your dad at a young age, opened this world to you. So you said you didn't know technical stuff. So any mentors or anyone or books that influenced you? I see you use candlesticks and you're using fibs. Anyone along the road that kind of opened your eyes to things?
Well, I started getting to Elliott Wave pretty heavy.
Okay. Yeah.
And my partner are not too sure.
Okay.
Was a big influence.
No wonder he said he was looking forward to hearing you.
Yeah, he said
thought he was a fan. Oh, okay. He's a shill. All right, Arnold's a shill.
No. He's a business partner, so he's paid to like me.
Okay.
So he was a big influence.
All right.
And just I've read a lot of books. Just technical analysis, moving averages, fibs. And at first you get into it, you're like, this is all BS. It's just people trying to make sense of nothing. And then you start to get into it and you say, wow, this actually works. Human behavior is actually predictable, and you can make money. So when I had that realization, how predictable, or at least you can put into probabilities human behavior, I realized I can make money.
Okay.
Consistently.
Okay. All right. So how many years would you say it took you to make that breakthrough, to make money consistently? And don't count your days, being young and just your drip. I mean, really, when your years when you decided I'm going to trade for a living.
2007 was the year, so it's been 15 years.
Okay. All right. And it does. So there, that goes along with what I say, is that you can't learn experience. It only comes with the passing of time and living through stuff. So,
losing money is the best teacher. Your own money is the.
Yeah, I'm just starting to get the hang of it. So anyway,
right. Well, that's the beauty of trading, is there's always new things to learn, and there's always new methods, new techniques, and just following all the traders that you have on your show, that I see come on your show. I mean, those are traders that I follow. Just the wealth of information that people are willing to post for free, and it's just the trading community on Twitter is phenomenal, and the amount that I learn each and every day from them is it helps me become a better trader. So every day is a process for me. Every day is a process, and I try to get better each and every day and learn something new.
Okay, so let's break down this S&P failing after a real nice rally. That everyone was bearish down there in late June. And now we're coming off here. I guess the big question is this pullback just a consolidation and correction of the recent rally, or
Yeah.
is it a continuation of the bear market and we're going to make new lows?
Well, I got a level here around 408.
Yeah.
55, which is the 382 fib from
the
July low. So I want to see if that holds. If it does hold, we can ping pong around here and then finally break above this blue downtrend line that I have going since up here in January.
Are you in Arnaud's camp? And I don't know. I mean, Arnaud actually, as long as you brought it up, he was bullish in mid-June when I had him on.
He has us. Yeah, he's bullish. Continues to be bullish. As long as
3,800 holds.
As long as 3,800 holds. Now shorter term, this 408 I believe needs to hold in the SPY. Below that, I think we come on down here, probably test this 394 level around this 50 SMA, and then we see what happens. As long as this 380 level holds longer term, I think we can head to new all-time highs before making new lows. But it definitely gets dicey when you break below this 50 SMA.
Okay, I'm getting a question from an attendee. Tulin wants to know, what did you find the most helpful way to learn at the beginning?
I think learning and then going and trying it. Okay. I think the best way to make something stick in your head is to put your own money against the idea, and you just use a very little amount, and you like try to find
micro lots or
very small amounts, and you see your percentage, and you test and experiment, and you find what works best for you, because everyone has a different personality, everyone has a different amount of time that they can put into this. So you have to find, what method, what technique works best for you with your personality and with the amount of time that you have to put towards trading.
I'd suggest to him that he also journal. So that
journaling. Oh yes.
Yeah. Gosh, did you do that at the beginning?
I absolutely did.
Do you still do it?
I do. I do. I make notes. I make notes, but it's not near as extensive because I've found what consistently makes me money. So but
it's kind of ingrained. It's your paradigm now. It's not something that you do something long enough, it becomes a habit. So
yes, but I still like fine tuning. I still like picking up other people's I just recently took a course from Mark Minervini and learned a ton. So I'm always trying to pick up new techniques, and and every market is different. And so
what you learn from him?
I think just patience and waiting till the setup is perfect before trading it, and what that setup is. The volatility contraction and then when to trade it. It works best in a raging bull market. Hasn't worked too well in this market, but when a raging bull market starts again, I'm going to use that technique. So I like to have as many arrows in my quiver as possible.
I like that metaphor. Any other markets that you're drilled down on, or that you pay attention to? Or the SPYs your main course?
So I do have a fund that trades the SPY exclusively. We got short right at the at this touch of this blue line just because of the risk reward, and we just took off half that short yesterday. So I want to see if this 408 holds. If it does, we're going to flip long. And then see if we
are you a CTA or a pool operator?
I'm not a CTA, but I do operate a fund. Several. I operate 3 funds. One that trades the S&P, one that trades Bitcoin.
Okay.
Let me see.
So let's go to Bitcoin.
Yeah, let me see if I can get that ticker BTC USD.
So you can do it in an unregulated manner, have a fund.
I can, yes. In the state of California, you don't have to have the CTAs or the certain designations. So,
and don't they? Is it limited to how many? Because I know, I've
yeah.
Is it
Yeah,
limited to how many investors and the amount of money you could control?
Correct. Once you get over, I believe it's 100 million or 100 investors, you have to start getting your licenses. But as of yet, I'm not near there. So I'm
okay.
I'm
All right. Well, we're going to try and help you. And how's it structured? Like 2 and 20 or what? Is there an incentive fee?
Oh yeah, there is an incentive fee. It's 4% if you're an unqualified investor, and then it's performance based if you're a qualified investor.
I see. Okay, and that's what, like $500,000 outside of your house? Nowadays it changes all the time.
It is I think it's 1.2 now, 1.2 million outside of your house.
Oh yeah. Wow.
Yeah.
Okay.
Yeah, it's bumped up quite a bit.
Well, thanks for giving me an idea of something I could do here in California. I'm here too.
Yeah, it's so easy, it's scary.
Okay. Yeah. Interesting. Okay, so Bitcoin, it's been kind of looks like a bearish formation. New lows look kind of probable to me. What are you thinking here?
Well, we're right. Let me clear some of this up.
You think we're going to hold here and put in a higher low?
So interestingly enough, I am accumulating long as we speak.
Okay.
In our Bitcoin account, because we've come back down to this trend line right here, and we're right at the 0.50 retrace from this low that was put in June. So if we can hold this 20,000 support, I'm going to accumulate between here and 20,000 slowly, and then see if I can catch a low before a wave 3 or a wave C. I believe that me and Arno believe either this is a wave 2 or a wave B before at least one more wave higher, and we'll be invalidated if we start to break this 20,000.
Do you use hard stops in crypto?
And
once you say that means no to me.
we give it a second just to see if it's a false breakdown.
Okay.
And then and then we get out. But how we accumulate, normally if we break below our stop, we're usually only, we might be 25% accumulation at that point. These cryptos move so fast that when they break down, they really break down hard. So we're able to get out pretty quick. So and our fund is far outperforming Bitcoin just because of how we buy and how we sell.
Why do you follow ARK, and why does everyone follow ARK? I mean, is it because it's so fun to watch Kathy Wood suffer?
Yeah.
Is that really the reason people do it?
Well, I follow it. I use ARK. I use ARK to hedge.
Okay.
It's been a great short vehicle for me.
Yeah.
So I always have it on my screens to see, what what growth is doing, unprofitable growth, and it's great to short on spikes. So I always have it on my screen.
Okay. Why don't you tell us about your business model and what you do? I know your Twitter handles at NPP Trades, which is what there's initials for what, North Post Partners?
North Post Partners. Yes, North Post Partners. Yeah, it's a company that I started with.
You could show your website if you'd like, Russ.
Oh, absolutely. It's a company I've started with Arnaud 2014.
So it's the same company that Arnaud has from Intelligence LLC. So if
that is his own company that he started.
Oh, okay.
Even before mine.
Okay.
So here's one direction we like up. Nice little animation.
Oh, I like that. Was that in Texas? That was
yeah.
Tesla.
Exactly.
Yeah. Nice. So you have a fund, and what is the minimum that people?
So the minimum is $25,000.
Okay.
So I have two funds. One follows the S&P 500. The other follows crypto. So we trade Bitcoin and Ethereum.
All right.
Exclusively. So
I wanted to ask you something, because just something I'm seeing technically with Ethereum outperforming Bitcoin.
Yeah.
And I was thinking if Bitcoin, made new lows. I know some people are talking about if you don't get this rally you're looking for, and we take out 20. I've seen numbers like at 14, which would be like a new low by what, $3,000, prior low 17 or something like that. And Ethereum does not make a new low because it's technically stronger. Or do you ever just trade the spread, long Ethereum, short Bitcoin, or vice versa, when you see them diverging as far as relative strength or relative weakness?
We stick to mostly longs in crypto.
Okay.
And I looked at them on an individual basis. We don't pair trade.
Okay.
We just follow their own counts and trade them accordingly, just how they're doing individually.
Yeah, this one as well, but it's good or bad from here. It's either Wile E. Coyote or a great buy.
It's in a great risk reward spot, I believe, and it's why we're accumulating this long as well. You break below this 50 SMA, that's a first warning shot that, hey, maybe this is not a good long right now. And then below this 14, 54, 13, 18 level, get the hell out if you're long, because we could be heading all the way down to 600, 500, 400 even before we find a low. But I do think that we could be in store here for at least at least a C wave, and then maybe a 3, 4, 5. If you know Elliott wave, C wave would put us maybe back here to 200 SMA. And if we get 5 up, we're talking this 3,000 level.
Okay. And do you believe in the correlation of it kind of broke down over the last several months? NASDAQ was performing. And Bitcoin really didn't. Any reason for the breakdown of that correlation?
I have no idea. I have no idea of the reason. I'm just following the price. I try to avoid reasons.
Correlations.
I try to avoid correlations and just follow price. It just keeps things simpler for me.
Okay. All right. And best idea for, summer's ending and we're heading into fall. Best idea for the fall of 2022.
Well, I mean, go back to SPY. I think if this 408 level holds and we break above this blue line right here, let's say we get back above 434. I think we have a run to new all-time highs.
Okay.
Plus some. I think we go 5,000. I think there's so many bears that will continue to short this rally.
Yeah.
And I don't think they'll cover until 4,600.
Yeah.
So well, we got to get above this blue line, retest it, and then keep going higher. If we fail, then we're right back in the soup we're in. So I think that's just something to watch. This 435 level, we get above that, and hold, you know, for several weeks, I would get long and look for new all-time highs, because I think it could come fast with the amount
I
of
like
short
that
fuel.
78.6 level up there.
What's that?
I think I like
Yeah.
your 78.6 level up there.
Yeah,
All right.
as a target. Yeah.
Well, you know, I appreciate you giving your time and and sharing your journey and what you've gone through. Root for you and Arnaud, and hope that you guys have a great fall trading season.
Yeah.
And
thank you for having me.
best way for people to reach you and talk to you, Russ. Maybe they'd have an interest in your fund.
Absolutely. You can DM me at my Twitter handle at NPP Trades, or go to northpostpartners.com and you can check out our site, read about our fund, and download our PPM for both of our funds right from the site.
Okay. Where are you in California, Russ?
I am in Novato, just north of San Francisco.
Huh. Okay.
And where are you? You in LA?
San Diego area.
Oh,
Riverside.
We're actually looking to move there soon. I love it there. What
You mean
yeah,
after
we're
the
looking at
housing
Carlsbad.
crash? Oh yeah, I lived in
Yeah.
Carlsbad for many years.
Oh, did you? Okay, yeah.
Yeah.
After the housing crash would be nice.
Okay.
Yeah.
You think there's going to be one?
I mean, I don't know if there's going to be a crash, but hopefully a nice 10%er. That
Okay.
I don't. But San Diego, I mean, is that ever going to come down? I don't know. It's so desirable. I just don't know if it's ever going to come down that much.
Yeah, it really didn't that much in 08.
Yeah.
I mean, it depends how far out you went, but yeah, you're right. It really never cratered.
Yeah.
So anyway, well, when you get down here, ping me.
Will do.
And-
hey, thanks for having me. And yeah, this is the first time that I've watched the show. It's great, and I'll be watching it more. So thank you.
All right. You know what else you became after this 30-minute conversation?
What's that?
My trading warrior brother, Russ Chow.
I'm honored. Thank you.
Oh, come on. You can't say honored and laugh at the same time. It's an
honored,
oxymoron. Anyway, you survived it. And I appreciate your, being here and talking with us. And I learned, that it's easy to open a fund in California. California, it's really not easy to open anything. I'm kind of surprised, because I call California the state where you need a license to get a license.
Well, they want you to open things so they can tax the hell out of you. So
okay.
Yeah.
All right. Yeah, that's probably it. Yeah, 11% state tax. I love it every year.
Oh, yeah, it's fantastic.
Don't you?
It's the best.
Oh, you don't. All right, buddy. So Russ Chow, everybody, know how to reach him at NPP Trades. And Russ, good luck with Paul this Friday, and was really great meeting you.
Thanks, buddy. Take it easy, man.
All right, so that's a wrap, everyone. You could join the team in 17 minutes on the Morning Edge, and I'll see you guys tomorrow. And don't just count your pips, count your blessings. Adios. How do I end this now? Oh, there we go.